All right, just have a couple of quick charts I want to show here this morning for some trades that set up overnight in the European session, as well as the open here this morning in the U.S. I know we got a lot of new traders in here. We got some folks from overseas trading. We got some night owls that trade overnight here in the U.S. And just to orient you here on the chart, this is I'm here in California, so this is Pacific time down here. This line right here is midnight Pacific, so this is pretty much the kickoff of the European session right here. And there's been a strong correlation between the futures oracle on the euro and the U.S. equities. We've shown this before in other videos where you can put the it doesn't always correlate perfectly, but normally it's pretty close. And what I wanted to show here was on this chart, overnight going into the European session, all the equities pretty much had a very strong run up here into these resistance levels with a little pocket of consolidation. And what was interesting about this is look at even though you were kind of going sideways here, these oracles were pretending the breakdown. That's what I like about these. They're almost kind of forward-looking in the fact that even though you were kind of going sideways and consolidating, you were seeing some divergence, quite a bit of divergence actually, and looking for the short setup here where it broke out of consolidation to the downside. After the break, of course, this is our thrust. We get a little retrace, thrust, retrace all the way down, and the trade would have stopped out somewhere down in this area down here around 84 when you came back up through the stop dots. So if you got filled here, I don't know, call it 92 short, and you wrote it down to, I don't know, 84-ish area, this whole drop was about 80 ticks. It was actually longer than that. It was closer to 120 ticks, but you could have got the sweet spot of the trade would have been about 80 ticks, or about, with $10 a tick, you're looking at $800 per contract on that one short trade right there during the Euro session on EMD. Now what's interesting is you can see here, let me advance this chart a little bit, just to orient you here, this is 5:30 Pacific, this is pre-market, here's 6:30 over here, so the U.S. market for the equities opened right over in here. So here again, what I wanted to point out is that even though the market was consolidating before the open, see how weak the oracles were? See how the longer-term oracles very, very weak. And this divergence, once again, let me expand this out so it's a little more pronounced. See how this was portending the breakdown, the coming breakdown right here? See it? See the weakness? So the short setup here, now normally we like to give it 5 or 10 minutes. Today we didn't have the luxury of 5 or 10 minutes. About 6:32, 6:33, the break occurred right in here, pretty much across the board on the equities. See it? Right around this 82 level. Right around 82 or so. Everything took out support. The Russell broke down. Actually, if I recall, I have a Russell chart up here. It actually led the group a little bit. NASI broke. YM broke. I have a NASDAQ and TF chart I'll show in a second. But pretty much wanted to ride this down, ride this down, ride this down. And I think we said, what was that stop? You remember 78.10? 78.10. Remember that stop? That's why we had it right there, 78.10. Took you out right here on that stop. And so this could have been what we call a one-and-done trade. I mean, if you got in here, it's shorted anywhere around 81, 82, and you got taken out at 78 or even a lower level, you're looking at about at least 50 ticks or $500 a contract. $10 a tick, EMD. Felt pretty much no heat at all. I mean, it just fell off the map and down it went. We call those one-and-done. A lot of traders are pretty happy with $500 trade. And if you hit your profit goal for the day, we kind of teach this, that if your profit goal is $500, $600 or anywhere in that neighborhood, you pretty much want to go to sim or stop trading. You want to lock those profits down. Now I want to show one other thing here. I'm going to bring the Russell chart over. It's going to look very similar to this. This is TF. This is the Russell. Now the volatility on the Russell is a little woolly for some people. If you're you're going to have a little stronger constitution, so to speak, to kind of handle the moves that you get in the Russell, because the retraces tend to be a little deeper. Here again, you see we had the run up into the European session on the equities, Russell here. Interesting, you see the huge divergence with the oracles here. See how even though the market had pushed higher and was consolidating at these higher levels, the oracles were portending a sell-off. See it here? See that? See how nice that was? Of course, you see it took out support right in here. I'm not going to get into the mechanics of how and where and why to get in all these trades. We do that in the training sessions, in the webinars, which I'll show you how to access in just a second if you're a subscriber. There's lots of little places to get in here. You know, you get a probe trade, pull down, probe trade, down she goes. And then that trade, the final short stopped out somewhere kind of down in this area down here. Would have been the end of the road for the European trades. U.S. equity market opened over here, 6:30 Pacific, 9:30 Eastern. It was right about, kind of right in here, 6:30-ish. Here again, remember we said that the Russell was kind of telling us that the whole equity market was going to sell off. So if you were tracking NASDAQ, for instance, tracking EMD, tracking YM, even if you don't trade the Russell, sometimes it's a good idea to keep an eye on what it's doing, because in this case, you can see here this morning, it was by far the weakest of the bunch. Even though typically Russell has these very deep retraces, and here it was just yellow bar probe down, yellow bar probe down, yellow bar probe. Lots of nice little places to pop in and take shorts all the way down here on the Russell, or use it as a guide to take shorts in the other markets. All right, if there's no questions on that, I'm going to bit one more chart up here real quick. I've got a NASDAQ chart I want to show. I didn't put the oracles on this one just for simplicity's sake. I want to show the short trade here. Here was the consolidation. In this case, we have our guidance dots here from the Pro package. Here's our guidance dots. We're pretty much telling us, like the other equities markets, to look for a short on NASDAQ. In our pre-market assessment, we teach how to do that. We look for support and resistance levels. Here we had the support level in here. We're consolidating, going sideways pre-market. Here's our resistance level up here. You can see that pretty much we were trending down just like the other markets, like this. Almost kind of a little pennant flag type formation with the apex at the support level. Now, depending on where you pulled the trigger here and got short, if you got short just a tick or so under this 14 level, right in here, you did feel a little bit of heat on the retracement. See how it pulled
Charles,
against you?
just real quick.
Yeah.
Heads up for NASDAQ traders, you just hit resistance. So I'd bank some coin if you happen to have taken that long. You just hit that line I drew.
Yeah, well, we can come look at that in a second, Gary. I'll flip over and take a peek at that real quick. But you did feel a little bit of heat here. Okay, if you got in here, like I said, on a break of this 14 support area, it pulled against you about 6-8 ticks, but it never took out your trailing stop dots here. So you never felt any pain. Didn't take you out. Of course, it rolled over, resumption of selling. Down she went, down she went, down she went. And I think we called the stop out at, I want to say it's 96 1/4. Wasn't it like 96 1/4 it stopped us out right over in here? Remember? Now you did have a double bottom here. We were calling this. There was a high energy time, if you recall, over here, 6:55. This, if you recall, this was happening in real time. We were saying, hey, this might be a double bottom. We're coming up to a high energy time, which was right here. I'm going by memory here. I think it was 6:55. By the way, if you're new, high energy times are times in the market that we almost kind of treat them like news events. We're expecting a swing high, a swing low, continued or increased volatility. And sure enough, you can see that this right ahead of this, and all the equities pretty much kind of bottomed out right in here. Although over here, just to the right, you did come and check it one more time, broke it by just a few ticks. Now let's come over and see what Gary's talking about over here. Let's go over to what's going on right now. Yeah, see now what happened here, just real quick, do a quick analysis of what our friend Mr. Nazi did here. Here we punched up to what we call line in the sand. If you're new to the terminology, line in the sand means that we take guidance generally from these longer range dots here. And for the most part, if you're underneath of these, you know, you're looking for short trades. If you're above it, you're looking for long trades. And here, after it hit its head right at that level, you had a pullback, which I think Rich and Gary were talking about scalping some shorts on the pullback there. And then, of course, you see what it did here is it just flipped and took out the resistance and blew up through it, setting up a nice long trade that you could be in right now. And I think the resistance area that Gary is talking about is pretty much right back to this level right in here. Let me expand this.
Yeah, just a little lower on that last swing, down just a little bit. I'm looking at a 12 this morning.
Oh, yeah. Well, it's looking now, of course, that this is starting out to be kind of a head and shoulders type bottom here. You can see that we came, put in a bottom, high energy time, checked the bottom, came up to the line in the sand, pulled back a little bit, and then blew up through it, setting up the long trade you could be in right now. Now, if you were long from any of these breakout levels down here, I don't know if anybody is long, but if you took a breakout here, you can see here that if you get anywhere up into this resistance area near 14, you're going to want to bank some coin and tighten your, well, it might hit it while we're watching it here. And you could get very aggressive on your stop level. What we like to do is, generally speaking, trail our stops kind of around where the stop dots are. So I'd put a stop way down here, which would give quite a large drawdown at the end of your trade. Here we are. We're just hitting it, 14. Just hitting it. This came all the way back to the breakdown area here. Now you could box this in with this nice little run up. Just as say you got filled at I don't know. Let's use a round number 02. Let's say you got in at 02, 2302-ish, and this is what 14. What is that? 12 times 4, 48 ticks. 48 times 5. Nazi's $5 a tick. What is that? $240. This trade. It's one trade right here. You got filled right here around 02, and you were still long. You'd be up around $240 for one contract, $5 a tick. We like NASDAQ. We like the dollar DX. We like YM sometimes. At $5 a tick, of course, they're half the risk of the little bit higher flyers like EMD and TF, the Russell, at $10 a tick. And when we say that, we're talking about initial risk. Here, it looks like we're trying to break it. Now, if I was in this trade, I'll tell you, I would aggressively get my stop up into this area right here. Stop dots are here. Give it a little bit of wiggle room. If you were trading multiples, you definitely want to be peeling some off right here and boxing in your stop. Yep, trying to push higher. They just want to push these equities up. Look at that.
Charles, if it does go up any higher, there's a 50% retracement at 2317.75.
1775?
Right.
That's pre-revolution.
That's true.
1775?
Yeah. That was a year before the birth date of the Illuminati.
That's true.
Yeah, just a year after Rich's birthday.
2 years. 2 years after.
Now, yeah, okay. So Gary's calling out a resistance area up in here, which you can see kind of corresponds a little bit to where the upper end of this range was over here. See this upper end of this range right up in here from the pre-market resistance levels? See them? Yeah, let me expand this chart out so I can get the whole thing in here. Hold on. Let's open this chart up a little bit more. There we go. Yeah, it was a nice head and shoulders pattern. By the way, if you have a chance, you really want to invest in a couple of nice wide screens. I got a big, nice wide 27-inch screen here. See how nice this is? You can see the whole market move at a glance. See it? See how nice that is? Really makes a big difference. Now, another thing you could do is, if you were aggressive on your stop, is pull your stop up right into here. So you're stealthy kind of coming up behind it. And if it gets up anywhere into this 17 3/4, 18 area, you're really going to want to peel some up here and aggressively tighten the stop. I would get the stop down to 3 or 4 ticks if you get up into here, because she could take a big chunk of it away on a retrace like this. Hits her head up here. All right. Any questions on what we showed here today? Any questions on putting the oracles, making use of the oracles on some of the equity charts? Just to recap, we showed, if you recall, we showed the Russell. Here again, if you don't trade the Russell, if it's a little too woolly for you and its moves, you can simply tuck it in the corner of one of your screens and sort of keep an eye on it. Sometimes it leads, sometimes it doesn't. Here, for instance, look at this beautiful breakout on the Russell here. Came back just as strong or stronger than NASI. Boom. All the way back to the breakdown level here. Here's your breakdown level from the open right here. All the way down to here, bottoms out. High energy time, 6:55. Never breaks it. And up she goes. I mean, you know, even if you didn't pull the trigger long on the Russell until way over here, say you didn't get in until, I don't know, this break of 35 area, plus or minus a couple of ticks right in here. See how it did a little shelf, came up, put a little shelf, pulled back, and up she went. You'd be up 35 to 40, about 50 ticks. 50 ticks on that trade alone right there. That could be a two and done. You know, you pulled the trigger here, you made 30, 40 ticks. Pulled the trigger here, you're up 40, 50 ticks. There's one bone for you. 10 bills. It's not complicated. It really isn't. If you're new to watching the futures market, I got to tell you, you know, I switched off of options and stocks a long time ago, the futures, and they're just so much easier and smoother and simpler to trade. So much easier, and you don't have to research the markets. Wonder, you know, what's the, you know, earnings coming out, and you know, what's the next tech trend, all that kind of stuff. You basically, you know, you pick one or two or three instruments, pick one that you like, pick EMD. Let's see what EMD is doing right now. Oh, smack a bony. Look at this breakout. Took out that 77 with a vengeance, and up she went. Be trailing a stop somewhere in this 83, 60-ish area would be your stop right now. See, from 77 from that breakout, you'd be up, I don't know how many ticks is that? 84, 70 ticks from the breakout here. 7 bones. I mean, even if you didn't, I mean, what's nice about that is even if you didn't take any of these trades over here, these nice short trades, probe short, down she went, another 30 ticks. You could have just taken this long breakout trade and you'd be up very nicely for the day. By the way, we do have for subscribers, we have a webinar, a trading webinar tonight, 5 to 6 Pacific. We'll send out reminders here shortly. So if you can, try to make that. If not, we have recordings. I want to show that real quick too. We do have recordings on the web. If you just signed up, we have a lot of new members just came in here over the past week or two. You're going to want to go to the subscriber link on the website. See where it says click here for webinar recordings? You're going to click right here. It's going to be your last name and the email under which you signed up. Last name, capital letter, email is the password, your email. You log in, it's going to look like this. Now, one of the first things you're going to want to do is if you're brand new or even refreshing yourself on trade setups is go to what we call this trader kit. See the trader kit right here? In the trader kit, you're going to want to kind of work your way down through this. We talk about risk and money management. I'm not going to click on all these links. There's a lot of material here. You want to go through these setup and installation, go through all these videos. We have videos on breakouts. We have how to take breakouts, how to manage your trade, probe trade retracements, regular bar, yellow bar. You hear all this terminology, red bar, deep probes. Watch all these videos. These videos are designed to show you the specifics and the mechanics of how, where, and why to get into trades. So it's very, very important to spend time going through this trader's kit top to bottom. And then down here, of course, we get into more depth about how to trade the oracles. And then down here, we have a nice video. I think this is from Gary that shows using the trend line trader. It's another good tool that's part of the Pro package. And one last thing before we wrap, I do want to, we haven't mentioned this in a little while, and I want to highlight this for everyone. We do have a referral program, and we have quite a few of our members have taken advantage of this and done very, very well, I have to tell you. We have some traders, and I'm not going to name names, who have referred so many people and they've converted that it's almost covering the cost of their Pro package. So, you know, when we talk about is it possible to get a free monthly license, I'm not going to go into the details of how this works. Just bookmark and come to Viper Trading Systems referrals, small letters with an S, .html. Referrals, small letters with an HTML. If your referral comes in, takes a free trial, and converts into a member, then we spell out how you get, how that's taken care of on the referral program here. And with a handful of referrals, you can actually wind up with a free pro license. So, something to take advantage of. Okay, well that's pretty much what I had, guys. Did you have anything else you wanted to cover here, Gary, Rich?
Just real quick, Lauren was mentioning, look at that yellow bar probe after that background change.
Oh, right here. Yeah. On the EMD breakout. Yeah, let's just highlight. We'll go through this more tonight in the webinar, but this is a good point here, Gary. Here's our trend change. We come up, we pierce the stop dots here. It's called a trend change, and normally the first we call probes. They're essentially retracements. But we call them probes. Comes into a nice higher level of support. Call that a yellow bar probe because the bars turned yellow. See, the market was starting to change its trend direction here. That's what's nice about this. It's pretty clear it was changing its trend direction. And then, of course, there's multiple entry. As Gary said earlier, there's aggressive, there's conservative, there's more. We'll cover that in detail. We'll get in more of the mechanics of the details tonight on how and why you could have entered that trade. And I think Nasir had just pointed out, and I totally spaced this, that there was a high energy time at 7:58.
7:58.
Yeah, Pacific time it was. Let's see, that would have been right.
Just about when the market took off.
Right in. Yeah, right there. 7:58 was.
They are amazing.
Yeah. 7:58. So, if you're not, everybody should be getting the emails with the high energy times, even if you're in a free trial. That was part of the free trial. There's two emails that go out. There's one before the European session at night that shows HPTs, which are high probability trades. Those are instruments that are poised for some kind of move, and we have software that shows us what those are. And then we have what are called high energy times, and here again we treat those much like we do news, where of course you can see here we had a beautiful trend change and a nice breakout with a 70-tick run. So you really want to open up those emails and keep an eye on them. We notice that some of our members religiously open them, others kind of sort of peek at them once in a while. They're good times to keep an eye on the market, and particularly later in the day. If you see a good high energy, particularly if it has double asterisks on it, which is sort of a really perk your trading ears up and really pay attention to those, particularly if they're near an open of the market or a close of the market like this afternoon. So it looks like they're going to run this thing all the way back up, huh? Get that. Take this thing all the way back up.
They're trying.
Interesting here, now you sort of look back at it, the oracles were kind of telling you that something was going to happen here, huh? Get that.
Yep.
Portending the move and the break and the trend change to the upside, which of course happened with the high energy time breaking out from that resistance level. Excellent. Well, all in all, pretty good morning. You could have been done early. You could have taken some probies here. You could have waited and simply taken this breakout here. Excuse me. No matter how you sliced it, we had a good morning trading. No doubt about it. Nicely green. Turn off the machine. Well, I recorded this little recap.